I would say TGIM. However, it is going to be a very unorthodox week, so I'm just going to refrain from saying anything really. But morning, guys. Hope your weekend went well. The weekend kind of is over, but kind of isn't, because we got the 4th coming tomorrow, obviously. So we're gonna see how today goes. I'm not planning on not taking a trade. I'm not planning on taking a trade. I'm just gonna wait and see, with this news release coming here in about 4 minutes, what the market is looking like, and if there's anything for us to, be willing to put risk on for. And if there is, we will. If there's not, we won't. Okay, so that's kind of my plan. Today and tomorrow are going to be short close days, meaning the market's going to be closing at 12 Central. So the market is not going to be moving at all on these indices. So if we do take a trade today, we're going to have to probably lean towards getting fully out of our positions at 5 or 10 handles and be done, just because we're not going to be wanting to hold anything. And to be honest, I'm not really expecting the hugest or biggest range today, given the fact that it's obviously right before the 4th of July. But we do have ISM manufacturing coming out in 2.5 minutes. So we'll see what this brings. And we'll look at some stuff for, the week ahead to kind of just anticipate some stuff. Obviously, we've got 4th of July tomorrow. We've got FOMC meeting minutes going on Wednesday afternoon. So the day after 4th of July, I am planning on trading in the AM session. We'll be on and see what is setting up for us. Thursday, we've got obviously unemployment, JOLTS job openings, and then NFP Friday, first Friday of the month. So we'll have to wait and see. I want to go do some back testing. Usually we're taking off on NFP. Given the fact that it's a small week, I wouldn't mind, using the volatility. Obviously not trading right at NFP, but later on during the AM session and potentially into PM session. So I'm gonna go do some back testing on this news release day, just to see how things look and just to get a gauge for if we need to plan for more of a PM session setup, or if we could, trade later in the AM after the news release stuff. But good morning, guys. How you guys feeling? You guys doing good? Did you guys go watch fireworks? You guys do anything fun yet? I'm going to mark up the new week opening gap for us. It's right here. So this is the 15-minute time frame. For those of you guys that have asked questions about the new week opening gap, this is what I do. Usually I do this on Sunday nights. But this is how you do it. So basically you have Friday's closing price with Sunday's open price. Whatever this gap is, this is what you want to mark up. And then what you can do, you guys can see here that the close is 482.50, and then the open on Sunday was 485.50. So you want to take the 50% exactly, and that's the consequent encroachment. You can mark it if you want. I usually like to. I gotta move this up to right there. So this is the consequent encroachment. I mean, what I like to do, I just make the consequent encroachment line dotted. And then usually what I do is I'll make these a little thicker. And then I just annotate them with, what is that? We could just do, usually I do new week opening gap, Sunday open, but you could do this too. This is probably easier if you just did the Sunday high or the new week opening gap high. Middle, right. And then we've got the new week opening gap low. Perfect. So yeah, this is how I like to mark it up. And I just have it. So I will probably delete these. I want to wait for them to get retested because we're so far away from them. I'm going to leave them on the chart for now. They're not really making our chart any, dirtier, I guess. But so I'll just leave them on here for now. But I do have a separate template that I save all the new week opening gaps on, for like the last 4 or 5 weeks or so. So that's what I like to do with it. Now let's drop down in time frame. Actually, no, real quick. I'm sorry. Let's jump up to the daily. So, or even the weekly. So this weekly liquidity void, we've had this marked out. We didn't tap into it on Friday. It would have been nice to see it deliver there. So to me, as far as a draw goes, to me this is the buy side draw. And as far as any bearishness, we've got pretty much the same thing down here. So I believe once we start printing some bearish price action. This is going to be where we're headed. This weekly fair value gap. This was already closed in at the beginning of last week. Price came down, filled this in, and then went here. So this would be my next bearish objective. Also lines up with this liquidity void on the weekly. Now let's continue to drop down. Let's go to the 1 hour quickly. So we've obviously displaced all through Friday, all through Thursday evening, if you guys remember, and we didn't tap into this weekly liquidity void yet. And we'll have to see. As of right now, it looks like this new week opening gap might hold and push us up there. I want to see how this news release came out as. It just came out a minute ago. Came out bullish, okay. So news came out bullish. Let's start dropping down even more. But yeah, this is going to be... Yeah, you see what I'm saying, guys? So like these candles, look how these candles have almost no volume to them. Let's actually measure up this range. I'm curious. Okay, that's a good range. That is a good range. So yeah, news was bullish, guys. And let's jump up here. 15 minute. We did just take out this low prior to this news release. So what I want to see personally is I want to start seeing some displacement. Clear and obvious displacement for us to the upside. And at that point we can look for today's what becomes hopefully silver bullet. And then in that case, we will be targeting buy side up here. Let's jump out to the 5 minute. Yeah, this high lines up with this 5 minute order block right here. But if you felt ever so inclined to want to hold for the weekly liquidity void, you could do so and aim for this high up here. But yeah, let's wait and see. Let's wait and see if we get some displacement. I'm gonna mark this out. Sell side. All right, let me open the chat box up. But yeah, guys, I'm not gonna force anything. Obviously, you guys shouldn't force anything either. You know, we talked about it at the end of last week how this week is going to be unorthodox. After this week, we should be finally through all the, you know, unorthodoxness. I don't know if that's the right word for it, but we should be good now for the foreseeable future, for this summer at least, until we get towards the end of summer and we get like Labor Day and some other stuff to worry about, contracts rolling over in September, things like that. But we should be good. We've had a couple unorthodox weeks now over the last month, but we should be good after this week. We should be good after this week. So just remain patient. You know, during these times, it's actually, I guess how's the right way to put this? It's a great thing that we've had profitable green weeks during these periods. These are periods of time where people get chopped up. These are periods of time where people are forcing things in unfavorable conditions. They're getting greedy. They're getting fearful in unfavorable conditions. These are not times where, and I get it, and this is why prop firms are a problem, because people are on deadlines, so they know that they need to trade, and therefore they force stuff that's not there, and they have terrible habits. Right? And it's great that we've been able to pull through and be green. A lot of people, especially people that trade smart money concepts, have been getting absolutely, you know, shit on these last few weeks. That's the truth. So it's good that we've been able to come out profitable. We've taken amazing setups, very high probability trades. We've been very, I would say, conservative, and now's the time to be conservative, not to be aggressive. But yeah, let's wait and see if we get something here. To me, the draw is still bullish because this new week opening gap, you know, we pushed through it. If I would have seen this hold and continue to push, and we displace lower, I would have been willing to play some shorts. But until that weekly liquidity void gets taken, we're gonna be, you know, playing what the market's gonna give us. But we'll see here. Not gonna force anything. We're gonna make sure that we actually have volume. First of all, because if we don't really have volume, we're just ranging, then there's not really much for us to do, right? Gonna start another forest fire if we set off fireworks in Canada. Yeah. Yeah, is explain. I'm not from Canada, so I don't know. What is Canada Day? I seen you guys just had it like the other day, but you guys have Canada Day on the 1st. Is that right? Is opening gap on the weekly time frame above still valid when it was wicked into the week after it was created? Yeah, it's still valid. The liquidity void is with the bodies of the candles, not the wicks. So the bodies of the candles, not the wicks. But I don't believe the wicks overlap either. But it doesn't matter, truthfully. I take that back. I guess they don't. I guess you still have this gap up in here if you do want to consider the wicks, but no, just going off of purely a volume imbalance, aka liquidity void. That's what this looks like, and you'll see this on every time frame, all the way down to the 1 minute. And it's actually pretty impressive if you notice them. You kind of sometimes, especially if you're looking at like a Forex CFD chart, it's hard to take them seriously because I think you'll see liquidity voids on those charts a lot of times that aren't really there, versus the futures CME charts. Those are there for a reason and on purpose, and they get respected pretty often, right? So another update for those of you guys that are following along or doing anything with Topstep. So just to update on the rules, because we did obviously get the announcement yesterday. If you were on phase 1, then you basically get reset back to your starting balance, and you just have to pass that one phase, and then after you do that, you're good. You don't have to pay the activation fee after you get funded to access the actual funded live funds. And then if you were on phase 2, same thing. You just still have to pass that remainder of that phase 2, and you're good to go. And you don't have an activation fee as well. But as you guys know, I was up 4% or so. So this was kind of depressing when I saw it initially. I'm like, dude, come on. But it's all good. I would have had to pass phase 2 anyway if it was still the normal setup. But yeah, they reset me back to 100K. 6% profit target. Once I hit it, then I'm good to go. I don't have to pay the activation fee either. I haven't got my challenge yet, but I do plan on purchasing. I'm debating if I should buy a couple 150K challenges, because you can buy them and you don't need to activate them for 30 days. Meaning you don't need to start trading on them for 30 days. You can just let them sit. But I'm for sure gonna get at least one. Because why not? And then whatever Topstep Combine account you get, it is just grandfathered in at that price. But it does sound like they're changing the prices after this promotional period. So like the normal prices from before are not going to be the same prices coming out of this promotional period. They didn't disclose what those prices were going to be. They said they were going to figure that out during this time. But they did make it sound like the normal prices were not going to be coming back. So we shall see. We shall see. Man, hopefully we get something that we can actually look to get long here from. I want to pay attention to these other time frames. Not a whole lot of volume though, guys. If you wanted to be nitpicky, I guess you could have considered this. This would have been a pretty risky entry in my opinion though. This is the 9 a.m. candle. You guys can see price came down. It did tap into this fair value gap right here. But this is right at news release. So you really didn't have a market structure shift as of yet. And this candle probably jumped down in here. I'm just assuming I didn't see it. And tapped off here, and now we're up here, but we haven't moved all that much. About 3 points. But we'll keep this marked out. Maybe we haven't filled it fully yet, so we might come back down and test it again. But we also have one more gap as well, right here, that was tapped into. But again, not completely filled in. 3 gaps. These two are in premium or discount, and then this one is not. But the other confluence is you got the new week opening gap high here. The activation fee is 150 bucks from what they said. So basically what that means is regardless of whatever account you got the combine for, once you get funded, in order to actually like get the account, it's 150. So that's like the only catch, if you want to call it that. You cannot copy trade though on TradingView, which is a bit annoying. You can group them on Trade-of-8 platform, but it does not show on TradingView. Oh, okay. Got you. That makes sense. Yeah, I knew their trade copier was through their own platform. I didn't know if you could sync that up with TradingView. I mean, I would imagine it would come in the future, but you know, at the same time, TradingView is not their service, so that would take TradingView being willing or wanting to collaborate with them on that. So I don't know if they would. Could also get back into Forex with another account. I was actually going to look at some Forex today, just because obviously we've got a short day planned on the indices. And if we don't have volume, guys, there's no reason to trade. I mean, if there's no volume mixed with a A+ setup, there's nothing here, right? And this is what makes a disciplined trader. I know that short weeks, like I said, they're annoying to people that are on deadlines for funded accounts and things like that. But it's just not the time to push buttons in those conditions. But we'll go look at some of these Forex pairs and see if there's something else setting up for us. So GU, the 15-minute chart, we just took out. These are the PM session. Well, we took out the London session highs, obviously, with GU. Let's go to the 15. Took out this high as well. Yeah, I'd like to see a market structure shift. What I'd like to see on GU, now that we've taken out buy side, I'd like to see market structure shift below here. After that, what I would prefer to do would be wherever this low forms, optimal trade entry, pull back into here, take it lower, head for all this sell side. But really, you could go for a 1 to 2, but we have to wait. We have to wait for a low to be taken first. So this is just tentative. On GU, Euro USD, yeah, same thing. I think GU is going to be moving a little bit more. Let me go back to AUD USD actually. Yeah, we need a market structure shift. Without a market structure shift, guys, this is bullish. If you go look at GU, EU, especially, you can really see it. It's quite apparent on Euro USD. Here's why. This low is taken out right here. This is a valid order block. This entire, all these consecutive down close candles, this whole thing is the order block, and we actually did tap into that. So that would be optimal trade entry bullish if you guys were using that entry model for Forex. Well, actually, no, I'm sorry. It'd be right here. So if you guys are using this entry model on Forex, this is so simple, guys. I've gone over this a couple times. It almost, like when I look at it sometimes, it almost is like maybe I should pay more attention to Forex. Not more attention, but I should, because we've been focused so much on indices that, I mean, I personally haven't done much with Forex at all. But you can just look at this, and you guys can use the sessions if you want. You don't have to. It's up to you. But I feel like this strategy is so clean when you get the right setup. You're not going to get it every day, but when you get it, boom. Like this is obvious, right? Boom, instant displacement up, market structure shift, pull back down, optimal trade entry. You've got low resistance liquidity right here in the form of these lower highs. And this would have been the trade. Obviously, we can't take it now. It's come and gone. But your entry would have been right at OTE. Stop right at the low. just to this high would be a 1.6 RR. 1 to 2 would be right here, right above these highs. So yeah, in order for us to take any sort of sells, again, we'd have to see market structure shift with displacement, all that stuff. And now that these highs have been taken, that's not a terrible trade. But until that happens, we're definitely bullish. You know what I mean? And that's GU. GU, it doesn't look like we got optimal trade entry from this low to that high. We didn't really get it yet. So I think a short would make sense, but again, you need the market structure shift, and it'd be a scenario you're looking to short, sell to buy in that event. But if you guys have questions on that in particular, let me know. I did see that there was going to be some Forex updates. I'm not gonna sit here and act like I know everything about economics and what the updates mean and what the different entities. I'm not gonna pretend like I know. I think everybody that's making videos acting like they know doesn't. ICT talked about it a little bit. Didn't really say much about it, but from things I've heard, it sounds like it should be moving faster. Forex should be moving faster than we're used to, which will be good. I mean, that'll be perfect for us, especially us, that are used to trading on the 1 minute, the 2 minute on ES. Then it's going to be very similar then with Forex, because usually Forex you're looking at the 5, the 15. Lowest I usually drop down to is like the 3 minute on Forex. Should have booked a vacation for this week. Yeah, you could have. I know many people, like if you took this whole week off, it would make sense. I don't think it's necessary to take the whole week off. I think Thursday, I think Wednesday, these last 3 days of the week, I think there's going to be great opportunities. But again, we anticipated this, right? This isn't a surprise. We anticipated coming into Monday, day before 4th of July, right after the weekend. The news was going to be the only thing that gave us any sort of added volatility, and that's why I felt like it was worthwhile for us to at least pay attention to the market, look at it, watch it, tape read. If there isn't a setup, there isn't a setup. If there is, great, right? And there might still be one to be had, right? I mean, we're still 20 minutes removed from opening range, 20 minutes removed from news. So, it might just, this might just be a little painful waiting. But yeah, we did anticipate this. And, like I said, once we're through this week, we should be clear sailing for the next couple of months. We did just work down into this gap. What I want to see now is I want to see this hold, and I want to see us start displacing higher, and I want to use one of those gaps as our entry, targeting buy side, targeting weekly liquidity void at most. Like I said, not sure how much we're going to move today. We only have, what is it, till 12, so we've got 2.5 hours until this market is closed for the day anyway. Look at that reaction, though. Right off consequent encroachment of the new week opening gap. But yeah, I wanted to wait and see how it held here, because we didn't know which gap it wanted to come hit. Nice reaction, though. We'll delete this. We don't need it anymore. And this is buy side, but I'm going to delete it, keep our chart clean. All right, so this is my anticipated market structure shift, guys. I'm not worried about price coming up right now. I want it to come up right now. I want it to come up. I want it to market structure shift, come back, give us an entry. Yeah, guys, I'm waiting. I'm not going to play this gap. If there was like obvious SMT divergence, then this would have been a valid entry for me without a market structure shift. Otherwise, I need to see this personally. And look what Naz is doing right now. Yeah, I would be talking through some more stuff on the chart, but there's not much to discuss, to be honest. From 9 a.m., which is right here. So this is the low of the hour we've traded. This is the high. We've gone 6.25 points in total. Oh man. So it's not really the volatility that I thought we could bring with this news event. As of right now, yeah, I wouldn't be firing away trades in here. NQ just took out the low. But anyway, now that NQ took out this low, now we do have obviously some SMT forming. Even if you don't factor in the 7:15 a.m. central low, you're just going off these recent lows. We got SMT here, SMT here. Looking as if we're a little bit more bullish on ES. Yeah, SMT divergence is basically the way that you would spot it is between correlating pairs, whether it's the indices or you could even do this on GU and EU. You could do this on EU and DXY. It's inverse with between EU and DXY, but if you're looking at EU or GU, if you're looking at NQ or ES side by side like this, and you toggle back and forth, if you see this low leading to this low, right? This is a higher low. At the same time, what time is this? 9:22 a.m. So 9:22 a.m. is right here. At the same time on NQ, this is what we were forming. See how this is forming a higher low and this is forming a lower low? So this is what's SMT divergence. You know, it's nothing is great by itself, but when you factoring it in with other PD arrays, other confirmations for your trade, this is an added one. This tells you that a reversal is likely coming. And, you know, you would like to be able to position yourself, if you can, with either the stronger or weaker one based on whatever trade bias you have. If you're looking to get long, you'd prefer to position yourself with the more bullish one. And if you're looking to get short, you'd look to position yourself with the bearish one. But if you're looking for bearishness, you would be looking at highs for your SMT divergence, not your lows. But because we're looking for a potential bullish play here, leading up to that buy side liquidity and weekly liquidity void, as well as the PD arrays that are already formed. The PD arrays that have already formed, guys, are the run on liquidity at market open, displacement back up through the new week opening gap. We waited for the news, obviously, right? News is bullish. And these are our gaps. These are our PD arrays for potential bullishness. Both of these are in premium. We got one reaction out of it so far. We didn't get a market structure shift. Therefore, there was no trade. And yeah, if you have SMT on higher time frames, obviously it's even more beneficial. So let's look and see if there is any. There is. We'll see where this candle closes. But as of right now, we do have SMT divergence between these two on the 1 hour. No SMT for bearishness. Why? Because we've got lower highs. Lower highs. Obviously the structure is a little bit different, but it's still the same structure, lower highs. So our assumption is the lead is the one consistent with our bias. Yeah, I mean, here's what I'll say. You know, again, it's nice to be able to, if you can be somebody that can master every single one of these concepts, and you want to, you know, factor in the six sister and which one's the leader and which one's the laggard. Obviously, you can pretty much tell when you look at a higher time frame chart, kind of like what we're doing here, like side by side, and you see, you know, one of them has taken out highs, one of them hasn't. And that is the only discrepancy to me. What sticks out to me when I see difference in structure is SMT divergence. Other people might see a potential six sister, and then people will say, well, how do I know when there's a difference between SMT divergence and it's just a six sister and it's going to catch up and create the same structure? You don't know. You have no idea. That's why all the other PD arrays matter, right? Because if you don't get it on with your SMT divergence, well, then you're probably looking at the six sister, right? You're probably waiting for that structure to catch up with the faster indice, right? But if you do have that, all those PD arrays in confluence with it, now you have an A plus setup, and you can anticipate that you do have true SMT. And your SMT will always be stronger, obviously, the higher the time frame. If you can get SMT on the 15 minute, the 1 hour, that's probably a better telltale sign than you're gonna see a lot of SMT on the 1 minute, the 2 minute, the 3 minute. I mean, we have times where we take trades and we're factoring SMT in, but only at the very end am I factoring it in. I'm not looking for SMT divergence for a trade on the 1 minute time frame and like trying to frame a trade just because I see SMT on the 1 minute. If I see it in addition to what we've already seen on the chart, that's when I just mention it. I'll point it out, mark it up. But it's definitely not what I'm looking for to frame a trade. People that do that, I mean, good for them. It's just, it doesn't make a whole lot of sense in my mind, because you're just assuming that the SMT is going to hold and that it's not lagging behind whatever indice you're watching. Because you need everything, right? None of these concepts by themselves are worth taking a trade from. You need multiple. It's like innocent till proven guilty. You finding all these concepts, all these PD arrays, all these confluences and confirmations for your trade. It's evidence that proves that ES or NQ or whatever chart you're looking at is guilty and worthy of taking a trade. Otherwise, you just have to assume its innocence and not press any buttons, not sentence it to jail, whatever analogy you want to use. I don't know if that's the right analogy, but I think that's a pretty decent one. Yeah, it does give confidence. Yeah, it does. Yep. Because the idea of SMT is that there should be a reversal coming. Or not even SMT, just divergence. That's what divergence is. So that's true even if you look at the RSI. Right? Or if you look at any sort of an indicator, whatever, and like you're looking for divergence on like the RSI along with price, that's what divergence is. Regular divergence, how most traders use it, would be they would just use one chart. They wouldn't use a correlating pair. They would just have the RSI like right under here, and then like where price forms a lower low like this, maybe the RSI is forming a higher low, then that would be divergence just on that one chart. Yeah, I guess my best advice, Kitch, this is what I would say, because this is what I do, and maybe this will help you. If you struggle with SMT and it's hard for you to spot it, don't worry about it. You should trade the concepts and the PD arrays that stick out to you. For me, what sticks out: liquidity sweeps, break of structure, market structure shift, fair value gaps. That sticks out to me. And I don't have to look for it. I don't have to like dig through the chart and like dissect it. I just I see it. It just sticks right out like a sore thumb. So that's why I trade. SMT is not like hard to interpret. I guess I don't know what you mean then. Hard to interpret. I would assume based on what you've said so far, just between not knowing if it's Six Sister and not knowing if it's SMT, whether it should give confidence to the long bias. Well, if you have other PD arrays and you get SMTs and added confluence, why wouldn't that add confidence? You know what I mean? Like if you already for all these other reasons had a long bias and then you got SMT as well, why would that not add more confidence? Nothing says ES won't break down. Absolutely nothing. But it's something that just adds confluence, and to me makes the trade a little bit better than it was without it. And it's worth, if it's worth putting risk on for, it's worth putting risk on for. But yeah, none of us. I mean, you could have every confluence in the world and you could still lose the trade. I would say a realistic win rate that you guys could expect with these concepts, it's not as high as you think. It's not 90%. It's probably not even 80%. It's probably like 60 to 70%. And then like if you just like, get even, like, you just get really, really good at identifying improbable conditions, or with a little bit of luck, you take a day off where the setups would have failed, right? Like, to say that there's never luck involved, of course there's luck involved. It depends if you believe in luck, or if you believe, like, if you're faith-based, you would say God kept you out of the market that day, right? Like, what if God kept you out of the market on a day, like, you had to go do something in your normal life and you couldn't trade that day, and that was a day where it was super trendy and, like, all the setups that you would have taken would have failed. That's kind of lucky, right? People might look at that like, oh fuck, I can't trade Tuesday because I got to do XYZ. But sometimes it's best, because not every day you're gonna win. But if you were to trade every day and just show up consistently every single day, and you follow your rules consistently, you should expect right around 60 to 70%. Once you really understand the shit, and, like, you're doing it right, you're reading everything right. And that's what my Topstep analytics were telling me. I was literally, like, at 58% or something right before the thing reset. And that was not taking any profits at TP1. So if I was taking profits at TP1, therefore my winning trades that went break even, I still made some money on them, aka they were still a winner. Well, then it would be even higher. But that's like realistic win rate for the average person that I feel like has a good grasp on their strategy and a good grasp on their risk management. These people that sit here and say, do they exist? I have no idea. But I can tell you this: if they do exist, they're so few and far between. The fact that anybody would ever compare themselves to somebody that has a 90% win rate makes no sense. Why? You shouldn't even hold yourself to that standard. That's so unrealistic. If you can have an edge, let's say you won 55%, like at your peak, your best performance, you won 55% of the time. Well, that's a 5% edge. Let's say you did that every week or every month or whatever it is, right? Like, that's a 5% edge over time. Did you know that the casinos, their house edge is 3% per year? AKA, a casino would love to have a 5% edge per week, per month, per whatever. And a lot of times I get that that is kind of the problem with social media. The bigger problem is that people just lie about it, so you're not really seeing the whole truth. But when you see people, like, posting their winning trades every day, it's obviously, you guys know that that's probably a lie. But even if you think it's a lie in your subconscious mind, deep down, it still gets to you. I know how it is. You're still like, what's wrong with me? This person is just getting it right, and I'm missing it, and I'm not understanding it. I'm not good at this. Why am I so confused? Half the time you're confused because you've been lied to, and your expectations are wrong. But what if you had the expectation of over 50%, and then as you got good at that, you'll see that increase to 60 to 70 at most, right? But anything beyond that, you're on Santa's nice list. Anything over 70%, holy shit, guys. You just, say some prayers, thank God, because everything worked out. Probably kept you from some losing trades because of stuff going on in your life or whatever. But there's really no need to. If you're over 50%, like, you're profitable. You could be profitable with a shitty risk reward, with a 1-to-1 at most. You could be profitable. Just over 50%. And why is that great? Because 90 whatever percent of traders aren't profitable, and they, great, your risk reward's 1 to 10, but all you do is lose. Even when you do win, like, you're so emotional from your losses, like, it doesn't even matter. It's a good way to think of it. It's about to profit over time and letting the edge play out. Sometimes just get focused on immediate trade rather than the bigger picture. Yeah, and that's why I hate to keep fucking saying the same shit over and over again, but it's true. Like, this is why the prop firm era. I made a video about this. I said the prop firm era is a net positive for the industry because it's giving average people access to extraordinary levels of capital that they can trade with and make life-changing money with. I understand that trading on a .01 lot size, making $5 here, $15 there, $20 here is not life-changing money, you know, for most people. This is not, right? It's nice, and you know, you should be happy about that and compound that little bit of money over time. But I understand it's not life-changing money. So I think prop firms is a net positive, but I think for the majority are going to lose anyway, so it doesn't matter. But the majority of people, it's helping them create bad habits. Because you have to. You absolutely have to create terrible habits in order to pass these accounts in 30 days. So that's why I vouch for Topstep. I'm never going to tell you guys to do prop firms. I'm never going to tell you guys. It's up to you. Do you guys want to do live accounts? Do you guys feel worthy of taking a challenge? If you can't even be profitable on a demo account, why are you buying a challenge? You should be profitable on a demo at least first. Can you make money on a demo account for a week, for a month, without being emotional? Actually trading it like a live account. Not the BS of like, I'm in a trade, I would normally close this as if it was live, but because it's demo, I'm just gonna let it play out. And then it wins, and it's a big runner, it's a big move, and you feel like you're on top of the world because you're just like, oh my god, look at this trade I caught on my demo. I actually understand this shit. This is way more clear now, all this stuff. But in reality, you would have closed it if it was live. That's not treating it like a live account. So if you can do that on a demo, make money on a full month, like take the whole month. Why are you in such a rush? The whole point is to build the habit of a good trader so you can actually be a good trader and make money. You know, I mean, who gives, like, paying for subscriptions, paying for your Topstep renewal, like, it's so short-minded thinking when people have these types of inner quarrels with themselves, because your whole goal of trading is to become six-figure traders, millionaires, etc., have the life of your dreams, be free, not need to answer to a boss for the rest of your life, all this stuff, and yet you are willing to sacrifice all of that, make your learning curve so much longer than it has to be, all because you've got a $100 a month payment, a $200 a month payment coming out next 30 days, so therefore you need to be in some sort of a rush and do this with supersonic speed. At the same time, you're hurting yourself and you're making your learning curve longer because of it. When in reality, if you just sat down, took a deep breath, relaxed, lower your shoulders, open a fucking demo account, and just trade on the demo account and prove to yourself that you can be profitable on a demo, and then go live, do a prop firm challenge, whatever. Without that, it's like, what are you doing? You're just going to be more emotional. You know? You're not going to trust yourself. You're not going to trust the setup. You're not going to trust your analysis. You're going to overthink everything. You're going to still overthink things even after that point. You're never going to be free from it, right? But you're going to learn to trust it. You're going to learn to tell yourself to shut up and just trust what you see on the chart. Trust your analysis. And then live with the result. You're still going to lose, but you just live with it. It only becomes hard to live with when you've done something you're not supposed to do. Like over leverage, full port your account, revenge trade, emotionally, try to make back losses. Like that's where the only problem you're going to have is that. And that's in your control. That's the beautiful part about it. It's all in your control. But sometimes you have to slow down to speed up. You have to put yourself in an environment where you can win. Because you're trading against yourself more than anything else. You're competing against yourself. And if you're putting yourself in an emotional state and you don't have enough reps where you can trust yourself and trust the outcome and just be okay with the outcome, then you're reinforcing bad habits. You know, I mean, I paid, bro, like, you know, and, you know, people are paying to be here, and I get it. Get in line, man. The amount of money that I've spent to be able to participate in live sessions, get signals, get education for years, over 3 years, $300 a month. Never missed a month. Like clockwork. While buying funded challenges, while blowing trading accounts. I ain't like... So, you know, it's not like I don't understand, guys. I get it. But again, you guys aren't here. You're learning this skill set to be free and make millions of dollars. So why do we give a shit about $200 a month, $100 a month? My funded account challenge. I got to get it done in 30 days. And it's nothing to do about you guys paying for these sessions. It has nothing to do with that. It's just about the mindset of like, you're here for a bigger purpose. So like for you know, people let all these small little things cheat them out of the end game goal, and you just hurt yourself. And I'm saying this from experience because I did the same shit. I wanted it right now. I needed it right now. And the only thing I got right now was a lot of trips to the account funding section. Oh, I got to buy more Bitcoin. Let me fund my account again. Cash App, bro. I had so many Cash App Bitcoin deposits. It ain't even funny. So many funded challenges that I just bought, failed. All right, I'm gonna take this one serious, and then I would like run out of time. You know, I did that multiple times. And then you get to a point. I feel like this is the breaking point for traders. It's like the turning point, right? It's the moment where you sit there and you're like, does this shit even work? And you look at yourself, you're like, no, for real, like, does anybody actually make money? And you genuinely don't know. You're just like, maybe they don't. And then that's the point where people either turn it in, quit, and they say, I'm never trading again. It's all a scam. Or you keep going, and usually breakthroughs tend to follow that. But yeah, I can tell you, I've had all that all those internal conversations. I'm like, bro, this shit might not work. These guys all might be fucking capping. But hey, you're asking a very tall order. If you guys, you know, again, I'm not here to push religious beliefs on you, but you know, it's the whole cliche of like, when you ask God for courage, does he give you courage or does he give you opportunities to be courageous? You guys are asking to be free financially by being able to look at a chart, analyze it, and trade with the market makers, and be free by being able to do this. What kind of arrogance do we have in order to think that we should just like, it should come easy? And I'm speaking for all of us. And yeah, if you can't bear the heartache long enough to see yourself through to the end, I mean, no one's gonna feel sorry for you. No one's gonna feel sorry for me. No one felt sorry for me when I was losing my ass. If anything, they were happy to see it. They fucking laughed at me. It's crazy that trading so hard psychologically, that even when you have mentor signals every day, you're most likely still going to be unprofitable at the beginning. Yeah, yeah. By you guys trading with me, it might help a little bit. I'm hoping that this serves and helps you guys, and you guys learn. But it's not the fucking strategy. It's not the trading that matters more than it's everything else. Like me sitting here not taking a trade and pressing a button. Guess what? This would have been a decent trade right here, but it would have been risky. Push down, push up. If you looked at this as your 1 minute little market structure shift, to me, I'm not looking at it like this. We're on the 1 minute chart. We've been stuck in the same 6-point range for the entire morning so far. I need more than that. Right? We're pushing lower lows here on NQ at the same exact time. I have no FOMO. Zero part of me wants to be in this trade. Right? But anyway, yeah, it's that's what matters more than anything else. Seeing me get stopped out in profit or at break even live and watch me not enter again. See me take a loss and be frustrated, visibly see me frustrated, and then hear me say, all right, guys, I'm done. I'm getting off. I'll see you guys for PM session, or I'll see you tomorrow. And then I come back the next day, and what is my account at? It's the exact same thing when we ended the session, but the day before. I haven't traded. I didn't take any more trades. I'm not trading behind the scenes, right? Every trade, everything I'm doing, I'm telling you guys. That's more important than you know, you hopping on, I call it a good trade, and we hit TP3. That's more important than that. This is everything I just said was way more important than any trade I could have called out. But you have to understand. You can't just hear it. You have to actually understand what I'm saying. Because I'm not lying to you. I'm not trying to give you guys false belief. I'm not trying to give you guys false hope. I'm not trying to do that. And I'm also not trying to make it seem like just because you're right with your trade that you're gonna win either. Like sometimes you're gonna take a winning trade and you're gonna get stopped at break even and it's gonna go in your favor and you're gonna be pissed at yourself. That's part of it. It happens to me. It happens to anybody with experience. Anybody that says that doesn't happen to them, bro. Like nobody has a crystal ball. Even I've talked about this. Even the banks don't even know what the hell's going to happen. They have a better idea than we do because they're pumping the markets, but they lose. They have 15 red days a year or so, 12 to 15. How are they going to have red days? How are they going to lose money? They're not losing money on purpose. You just have to master yourself, and then all the stars will align. I can set up my hands now. Oops. Thing just disappeared. I can set up my hands now and miss trades, no problem. Before now, I would have blown accounts on days like today. Are you serious? I mean, I say that, but I probably would have done the same thing. It's taken me 2 years to get to this point, but it's worth sticking with. It does come, yeah. This is when you feel like you're in control. You don't feel in control like when you follow your strategy, take a good trade. Like, yeah, that'll come, but like, I know when I'm wanting to put risk on it when I'm not. And I don't care if this shit plays out and goes all the way to all these buy side levels. Tickle me pink. Go for it. You didn't give me the setup I wanted, so I didn't take it. Simple. Yeah, that was another thing too, that's part of the reason that I haven't been sending a whole lot of Forex signals as well. It's been more so like specializing in trading the index futures because less is more, simply put. And that is kind of the problem with, because would it be possible to even have somebody else that I know and that I trust and that I know is credible call out Forex trades so I don't have to, and that they're still quality and like they're paying attention to that market more so than I am? Sure, that could happen, but that's not a service to you guys. It might sound cool. Oh, great. Yeah, I'd love more trades. No, you wouldn't. You shouldn't. You might. It might be more fun because you're, pressing the button more, but it's not better. Yeah, no, I'm not trying to I know some people had to go. So I wasn't but this is normal. Like, people, they know what they want to hear, and it's not just me. Like they'll watch ICT or they'll listen to other people too, and like same stuff. They just want the tactical little strategy stuff. And you know what? Whatever. I was that way at one point. And I might not listen to like ICT's rants anymore or anybody's rants. Doesn't have to be like I might not listen to all of them all the time, but there were times where I just sat there on the other end of the screen. I just took it all in. And it's just listen to what is being said, but not just listen in one ear out the other. Like actually listen and understand, and then think okay, why are they saying this? What must have happened to them in order for them to even be saying this right now to me and everyone else that's listening? But usually that's not enough either. Usually that means you heard it, okay, you got it locked in the back of your mind, and then you continue on with your trading, and then all of a sudden shit happens to you, and you're like, oh, I guess what they said was that. Okay, I see why they said that now. Makes sense. But anyway, yeah. So I mean, there's Anyway, let's jump up here to some higher time frames. Oh, 5-minute gap. Yeah, just, could this play out right here, right now? Maybe. Am I going to feel bad if it does? No. I don't have FOMO. I don't wish I was in. But like, I'm just tape reading everything for you guys and with you guys. Like, this is all I really see right now. Price comes up, and this could be that 5-minute fair value gap. So this would be kind of what we could keep our eye on for this little tape reading session. See if that leads to anything. These higher levels. As far as NQ goes, I like that we've ran through the sell side. This would be the market structure shift right here. All right, yeah, unless something crazy happens like in the next 5-10 minutes, we'll probably just call it there. If you guys have any questions or anything you guys want me to go over, feel free to drop it. I'm definitely game to cover some stuff if you guys would like. But yeah, no trades. I don't think we're gonna get any trades today unless, barring something crazy happens here soon. And yeah, just tape red today. Unfortunate, no volatility. Let's go, I guess, look ahead at the week one more time. Yeah, FOMC meeting minutes tomorrow afternoon, so we'll be looking to trade AM session. And then Thursday looks good. We should be A-okay to trade AM or PM session on Thursday. And then Friday, same thing, late AM session or PM session on Friday for NFP. But yeah, otherwise, yep, just got to get through this week, guys. Just got to get through this week. Not do anything crazy. If you guys feel ever inclined to, if there is a week where you either want to take off or even just trade on a demo, you can do that. I'm not gonna do that. I'm gonna trade normal. I'm just letting you guys know. I'm gonna get this Topstep knocked out once and for all. And yeah, I'll just keep trading like normal. Not gonna do anything crazy. I'm not really gonna de-risk. I'm not gonna add more risk. Obviously, I'm just gonna take good A+ quality setups that make sense, that I'm worth, or that I'm willing to put risk on for. Oh yeah, I think we're about done. All right, do you guys have any questions before we close this thing off? I appreciate you guys hopping on this morning. I know we didn't take any trades. We didn't know if we would or we wouldn't. So, but yeah, if you guys don't have any questions, we can hop off here. And for those of you guys that are celebrating, get ready for some 4th of July. Get some hydration in ya. If you guys are celebrating any festivities, yeah, I'm sitting on my hands too. Nothing to go over. Tomorrow's gonna be the 4th. Happy 4th to everybody in advance if you guys are celebrating. I do plan on trading Wednesday morning, so obviously if don't talk to you guys until then. That's when we'll see each other. But if you guys need anything in the Discord, as always, obviously feel free to fire away or reach out to me personally if you guys need anything. But yeah, appreciate you guys. Grateful for you guys. Enjoy your 4th. Be safe. Don't do anything crazy. And I will see you guys on Wednesday morning's AM session. All right? Have an amazing Monday, guys. I will talk to you guys soon. Peace out.